All right, today we're going to talk about a company called Capital B, and they are building something pretty incredible over in Europe. They are the continent's first publicly listed Bitcoin Treasury. And trust me, this is way more than just another company adding some Bitcoin to its balance sheet. We're talking about a radical new playbook that could change everything. So yeah, you heard that right. Capital B is the very first company of its kind in Europe to be listed on a public exchange, the Euronext Growth Paris exchange to be specific. What that means is, for the first time, investors in Europe have a direct, fully regulated way to get in on a corporate Bitcoin strategy. And how's that strategy working out? Well, the performance kind of speaks for itself. The company has already outperformed traditional assets like gold by 3 times. That's not just a little bit better, that's a whole different league. And it's all powered by Bitcoin's insane 70% compound annual growth rate. So here's what we're going to cover. First, we'll look at why Europe is the perfect place for this to happen. Then, we'll get into their totally innovative playbook. After that, we'll see the wild growth numbers, dig into their core philosophy, and wrap up with their mind-bendingly huge long-term goal. Okay, let's start with part 1, Europe as a powerhouse. You might be wondering, what is it about Europe that makes it the perfect launchpad for a Bitcoin revolution? Well, just think about the setup over there for a second. You've got a market of 500 million people. You've got trillions of euros stuck in pension funds, just starving for some kind of return. And it's all happening inside the world's second largest credit market. It's like a perfect storm of demand, mature financial plumbing, and a massive opportunity. So, that brings us to their strategy. How on earth does a company manage to stack so much Bitcoin so fast? The secret is a playbook that completely avoids traditional debt. Okay, the secret sauce here is something called the Bitcoin-Denominated Convertible Note. It sounds complicated, right? But the idea is actually super simple. Instead of borrowing cash to buy Bitcoin, Capital B raises capital directly in Bitcoin. Investors give them Bitcoin, and in exchange, they get a note that they can turn into company stock later on. It's brilliant. This creates this really elegant and powerful loop for stocking sats. So, step 1, they issue these notes to investors. Step 2, they take that Bitcoin and put it right into their treasury. And step 3, boom, the amount of Bitcoin backing every single share instantly goes up, making all the existing shareholders better off. And here's the absolutely crucial part. They do all of this with zero fiat leverage. No traditional bank loans, no borrowing cash. This insulates them from all the risks that come with fiat debt, while still juicing their Bitcoin holdings. It's a pure Bitcoin-first capital strategy. So why would an investor do this? Well, it's because the deal is structured to be what finance nerds call convex. In simple terms, it's a heads I win big, tails I don't lose much kind of bet. It gives investors some serious downside protection while multiplying their potential upside by 2 or even 3 times. It's a pretty sweet deal. All right, the playbook sounds great on paper, but does it actually, work? The results are, and I'm not exaggerating here, absolutely staggering. Get ready for this number. Since they put this strategy into motion, Capital B has increased the amount of Bitcoin on its balance sheet by an incredible 6,000%. Let me say that again, 6,000%. That's not a typo. That's the power of their machine. And for anyone who actually owns shares, this next number is just as important. The number of sats, that's the smallest unit of Bitcoin, per share, has shot up by 1,600%. This means every share you own today represents a way, way bigger piece of the Bitcoin pie than it did before. I mean, just look at the chart. The before DAR is so small you can barely see it, and then the after, it's just a skyscraper. This one image really tells the whole story of how explosive this strategy has been. But numbers don't tell the whole story. To really get what Capital B is all about, you have to understand the core philosophy, the mindset that's driving every single move they make. Their mission says it all, right there. This isn't about day trading or trying to time the market. It's just accumulate Bitcoin. Do it consistently, do it relentlessly, doesn't matter if the market is up or down, and then hold it forever. That conviction is the bedrock of this whole thing. So if you had to boil it all down, what is Capital B? It's a financially conservative, pure Bitcoin maximalist playbook executed with some serious capital markets know-how, all happening at a massive European-wide scale. Okay, so this brings us to the end game. What's the point of all this? Where is all this relentless accumulation headed? This is where it gets really, really ambitious. Their goal is to become what they call Europe's nuclear reactor for hyperbitcoinization. Think about that metaphor. They want to build an engine so powerful that it can just absorb the massive flows of capital sloshing around Europe and convert it all into Bitcoin. And they've put a very specific number on that goal. The mission is to accumulate 210,000 Bitcoin. Now, to put that into perspective, that is 1 full % of the total supply of Bitcoin that will ever exist. 1%. And this isn't just some vague, far-off dream. They have a clear roadmap. The plan is to get to around 42,000 Bitcoin by 2029, hit 100,000 by 2031, and then reach that final goal of 1% of the supply by 2033. So that leaves us with this one final, kind of mind-blowing question. With a strategy this innovative and a philosophy this relentless, is it actually possible? Can a single company really act like a financial black hole and suck up 1% of Bitcoin's total finite supply? Well, the next decade is certainly going to be interesting to watch.